Hello and welcome to another major market movements end of the week market review for June 12th, 2015. I'm Quad G, and in this video we're covering the crude oil market, the natural gas market, taking a look at the NASDAQ 100, the 10-year note, and also some of the FX markets as well. So we're going to go ahead and I'm going to take that out of the picture. We're going to go up here to the US dollar. Alright, and I'm actually going to move this down here. And okay, so the US dollar, it's been making this move to the downside. You continue to see a downtrend with lower lows and lower highs. And we recently saw, we've gotten these three peaks to the upside here recently, with which could be a leading diagonal. I'll go more into that here in a moment, but there is actual 5 waves to the upside: 1, 2, 3, 4, 5. So this does have the potential of being a leading diagonal. There's some other ways that we could look at it, and we'll go over that in a moment. But the day does end almost as an inverted hammer candle, as you can see here on the QG3 chart. And the intraday high seemed to want to come up and test the 20 DMA. Didn't quite get there before it was beaten back down. So I do think there is some resistance there just underneath that 20 DMA. You can see that the Bollinger Bands are pinching, which means that there's energy being built up here as we hover in and around the 20 DMA. Currently, though, we are underneath that 20 DMA with a bearish alignment to the downside. So if we see the price come down and start pressuring this lower Bollinger Band at this current phase, it would be a very bearish indication of potential midterm sell-off yet to come. So something to be watching for. The dollar on the weekly, we do get a negative close on the week, coming down from last week's almost hammer candle, and we didn't quite have enough selling pressure to cause it to come below last week's intra-week low. So what would I call this? I would say it's semi bearish. Certainly neutral at the best. Let's see. We got on the EWO here, again, right around that zero line, really not showing us much of anything. The RSI, we've come down to test the 40 here on the RSI. We're testing it, and it looks like the market is, at least the last couple days, is kind of deciding what it's going to do with it. Or are we going to break that level, or are we going to bounce back up and test 60 again? It's hard to see. We'll have to wait and watch. I do have I do think the overall picture does favor the downside slightly, but we're going to need to see some follow through fairly soon. The daily MACD is open to the downside, and on the weekly, open to the downside as well. So that's all looking bearish. So overall picture for US dollar, I do think it's bearish, and especially while we maintain a presence underneath that 20 DMA. All right, let's look at the euro. All right, so the euro. We've got a daily close here. It looks like a hammer candle. On the daily. So my expectation would be to see some follow through to the upside early next week. The QG3 is in a bullish alignment to the upside. And again, that's expecting the 20 DMA to serve as support for any continued advancement to the upside. Euro on the weekly, again, kind of an inside positive week, inside last week's range. I'll call it, in that particular picture, I would call moderately bullish to halfway neutral. And Euro on the EWO, again, not much to show you there. The RSI, we're testing that 60 level. We're starting pressuring it somewhat. So we'll break at that 60 to the upside, invites continued upside advance to the 70 or higher level on the RSI. The MACD is open to the upside on the weekly, and on the daily we're open to the upside as well. So Euro overall picture is still looking very bullish. There were some questions about the Aussie dollar, where I think it might be heading. So we'll take a look at it real quick. Let's move this to a daily chart. All right, so I was thinking we may have had the start of an advancement to the upside here with a 1, 2, 3, 4, 5 waves to the upside, and then it looked like we have an A, B, and C expanded flat type correction. Now that count could still be true, though we're not getting the kind of fall through to the upside that I would have typically expected. We're just getting this sideways range bound chop at the end of this shot to the downside. So this isn't this is eroding my confidence in that particular count. Really, I don't have any particular confidence in any particular count right now. I think it's best to leave that market alone. The QG3 is still basically a neutral alignment with the 3 EMA. Looks like it's going to close right at the 10 EMA and just underneath the 20 DMA. So I would say it's still somewhat of a bearish picture. And also on the weekly, we do get a inside key reversal to the upside. If we had closed a little bit higher, if the week had closed right above the last week's high here at 78.19, this week that would have been a very solid reversal pattern. It's basically the inverse of I don't know what you want to call it. I don't know if there's even a name for it, but it's basically the inverse of a hangman candle, which is typically a bearish candle pattern. This would be an inverted hammer candle with a complete reversal, trumping the end of the handle of that inverted hammer. That would have been a very bullish reversal two candle pattern. So, but we didn't get it. So again, I think we just need to wait and see on this market. The EWO really not showing much of anything there. I can point out there is a slight negative divergence between this low and this low, with this movement being lower than this last swing low. So there is a slight negative divergence there. The RSI, we did come down and we did break the 40, but we bounced since up back into that 40-60 area. So really kind of trendless right now. And MACD on the daily is closed out and is neutral. And on the weekly, we do have it open to the upside just a bit. All right, so overall picture for Aussie, I think it's just terribly neutral to slightly bearish. And really, I don't see anything there to really grab a hold of to make a trade out of. So I think it's best to just leave it be. Let's move on to the pound. All right, so Great British Pound continuing its multi-day advance to the upside as expected. We've come up now and we're crossing back above the 20 DMA. Looks like we're going to close with a slight bullish alignment to the upside, and that's all very well and good. The weekly closes as an inside double key reversal, this 3-candle pattern here. It originates inside the previous week's low, but it closes above the previous 2 weekly opens. So that's an inside double key reversal. And that sets a tradable low at the last week's intra-week low at 151.62. All right, EWO right there at the 0 line. Can't really tell you much of anything there. RSI coming up to test the 60 level. We'll see whether or not we'll get a rejection or a breakthrough up to 70 plus, probably next week. And then on the weekly, MACD, we are wide open to the upside. And on the daily, we just ticked over today with the signal line coming across the baseline there. Histogram bars moving above the 0 line, so that's bullish. Back into a bullish alignment to the upside as well. So overall picture for Great British Pound, certainly looking bullish at this point in time. Take a look at the USD JPY. All right, so it looks to me as though currently we only have 3 waves up to the upside, which is corrective, and now we're starting to peel off to the downside. Now this could be an X wave and we get another zigzag to the upside, possibly. Otherwise, we're done with this correction and we'll start to keel over probably very slowly and then finally break to the downside once we get below 122.40-ish. The QG3 is in a neutral alignment. We were previously bullish, that's ducked back in, and now we're still testing the 20 DMA, which is still holding as support. So if we get a daily close below the 20 DMA next week, that would be another indication that this market is in trouble, and more likely we'll continue to see some selling off to the downside. Weekly, we do get an inside key reversal engulfing last week's positive candle. So that's a topping pattern, setting a key low, or key high, excuse me, at 125.86. So we got a higher high in the price here compared to this last swing high, or actually these last 2 swing highs. Actually, it's higher than this last one, but it's still lower than this one back here. So there's still a negative divergence there between the 2. Let me back up this a little further. I want to take a peek at the weekly also. On the weekly here, definitely have a negative divergence there too. So that's bearish. RSI, we're still in that 50 range. It's very neutral. And the MACD on the weekly, we were bearish. It's popped back up a little bit, and now I would say we're somewhat neutral there. And on the daily, we've ticked back below. We're now on a bearish limit to the downside, so that's looking bearish. Overall picture, I think, for USD JPY is looking bearish. I think we've completed a top, significant top, and we'll continue to see some fall through to the downside in the next week. The Dow, All right, so the Dow, the week closes as this large spinning top candle. It could be a harami, which means we've got 3 negative weekly closes to the downside, and this week closes as a positive candle. So if this is going to be a turnaround point, next week we'd have to see a surge up and close above this week's high of 18,109. But anything short of that, or a close below it, underneath the spinning top, with a low of 17,715, would be an indication to me that we could continue to see some selling from that point forward. All right, so the Dow on the 50 DMA is the orange line. You can see that the 50 and the 20 DMA did pose some resistance this week. And then we got the 200 DMA right here in this red line below, which I think could see a test fairly soon. And that'll be a really important test. If we get a solid bounce off of it, right back up here into 1817, then I would say this market's not really ready to sell off. But if we get several daily closes underneath the 20 DMA, or even a weekly close underneath the not 20, 200 DMA, that's going to be an indication to me that that support is gone, or very, very weak, and we could continue to see some selling off from there. So wait and see. The weekly, well, we talked about the weekly close back here. Let's go back to the daily here. The day did close as an inside key reversal, setting a key top there at the high of 18,109. Though an inside key reversal is not the strongest of reversal candles. It's about half as strong as, say, an outside key reversal or a inverted hammer candle. So I think it's best to just keep watching that, and maybe not take any strong action towards it. The EWO, clearly a double negative divergence. On the top side, we got incremental highs, but on the EWO, we got lower highs. So that's really a perfect setup in most markets for a top, a serious top, and reversal to the downside, just considering EWO by itself. All right, the RSI, we did break the 40 slightly there. We did bounce back up, but this is an indication to me. You can see the last few times we tested the 40, we've gotten, it's held fairly strongly. This is the first time we've dipped as low underneath the 40. We haven't seen that since all the way back here in this sell-off. So I think this might be a warning shot, an indication that that support is weak. So if we see another daily close underneath that 40, I think that's going to be an indication that we'll continue to see some selling. It's typically, whenever we dip below that 40, at least the last couple times, we had some pretty serious rallies coming off of it. So if we don't see that kind of serious rally next week, and we just see some sideways chop or even some more downside movement, that's going to be out of normal from what we've seen even in the most recent past. So I think, yeah, it's going to be just another indication of weakness and possible selling. The daily MACD is open to the downside, and the weekly is open to the downside as well. So that's all looking very weak. So yeah, the Dow stock market in a whole is starting to look very weak here, but the choppy action is making it difficult to really get to build something choppy action is not giving us the solid foundation that we need to really sink a trade into. So I think for the most part, other than the NDX 100, which we've gone over before, and the reports, I think it's best just to wait for the most part on these other indexes to prove themselves a little bit more that they are indeed bearish and going to see some significant selling. Let's look at crude oil. All right, so crude oil, we've got so far just a three-wave move to the upside. My expectation is this is some kind of a fourth wave or possibly another sub-second wave, which we'll go over here in a moment. But I am still expecting more buying to the upside here, but we're going to have to preferably stay above this high here, and that high is at about 59.23. So we're getting fairly close. We need to be seeing some bottoming action here fairly soon to keep that bullish picture going. The 20 DMA is also a key level of support that the market may be wanting to test, and it's right there at 59.50. So we're very close to that now. It's possible we could get a touch of that early next week, and then a reversal. The crude on the weekly, just some more inside choppiness, almost an inside key reversal, but it's really kind of in the middle of a bunch of congestion. So really not much to do with that from on a weekly standpoint, other than I do like the fact that we have an impulse to the upside, and then we got this sideways chop, which could be just a continuation pattern for another advance to the upside, is what I'm holding on to. EWO, we don't have a negative divergence on the top side, so I think we are due. It's very possible we could get another move to the upside into, say, 65, 67. And we'll see the EWO come up just a bit, but it may produce a negative divergence with that occurring, which could set up a sell-off thereafter. Crude on the RSI, we're still right around in this 50 area, so very neutral. MACD is closed out here on the daily as well, so that's neutral. And on the weekly, we're still open to the upside, so that's bullish. So overall picture for crude, currently a little bit neutral, but I am expecting a possible turnaround here fairly soon, and then start an advance to the upside. Okay, let's go to the LE wave charts and go to the FX charts here first. Okay, so here's the US dollar index. This is what currently working off of. My thought is that we have a completed 5-wave count to the upside, and now we're working on this reversal. And it does look to me as though it's very possible we just have 3 waves down. That's currently all we have going on, is 1, 2, 3 waves to the downside. However, I do think there is still the potential of further selling based upon the fact that we've had this major run up and we haven't even come back down to the 38.2% Fibo yet. I do think there's enough room there for this at a minimum a correction down to around 87, down into possibly even this previous wave 3-4 support zone, all the way down here in about 85. I think that's certainly possible with this corrective move to the downside. It certainly could go further. You certainly could retrace all the way back down to 78 90 or even lower, and that would set a major high for the dollar, more than likely. So, but for right now, I do like this count that we have a 1, 2, and then a 1, 2 with an expanded flat ABC that looks finished, and now we're starting another impulsive drive to the downside. Of course, we have to take it day by day. And here's the shorter term count that I'm looking at. Here's wave 2, looks finished. And now we got sub 1, sub 2, sub 1, sub 2, looks finished. If this count is correct, we should start to see some selling off to the downside. Now, previously I was talking about this leading diagonal. That's certainly very possible. The other way of looking at it, since this leg down did retrace some into wave A, is that this is wave A, and excuse me, hold on a minute. This could be wave A, and then this could be an A, B, C for wave B here, and then wave C here. That's another way of looking at it, with kind of a running flat wave B. It's certainly possible, but between the two, it's really kind of a muddled picture as far as Elliott wave is concerned. I do like, however, the fact that the day does close. We got this pop up, and then we get this impulsive reversal that takes out the low of wave B. So we're starting, even though we had a little bit of an uptrend going, that's been dashed with this new lower low underneath the wave B. So it tells me that we could have another top set in place right here at, why don't you grab a hold of it, and thank you, at about 95.67. So while we're below that level, I still favor more selling. If we pop back up above that level, this is a potential breakout point to the upside at this stage of the game. So this has become a very strong, very significant resistance now at that 95.67 level. All right. Let's look at the euro. Elliott wave count. I think I had. Let me go out here to. Here's the longer term count. Very similar to the dollar count. We got 5 waves complete down into what looks like wave C, out of a previous wave triangle pattern, which I don't have it filled out in this particular chart. But anyway, we got the 5-wave thrust down. It looks finished, and now I think we're building this advance to the upside. Now we do have a 5-3-5 count that looks finished for a 1-2, 1-2 possibly, and now we're starting on 3 of 3 to the upside. But in order for that to be true, we need to look closer at this count. In order for that to be true, I'm starting to favor this 1-2, 1-2 count to the upside, and it does look like we may have completed it today, with an ABC down for a wave A. Don't have that here, but let me just put it up there real quick. So we've got a wave A here, A. We'll make it orange. So we got an A. We got a B here. And now it looks like we've got a C here. For completed, basically a contracted flat count with an ABC. 3, 3, 5, all in place. We got 3 down, 3 up, and then 1, 2, 3, 4, 5 for finishing a move. And then today we've got this nice rally back up above the end of wave 4 there. So that's our indication that this move to the downside is finished. And if we zoom in here even further, let's go to the hour. No, we're going to have to zoom in even further. All right, so here's our end of wave 5 here, and it looks like we got a nice impulsive 5-wave move to the upside. 1, 2, 3, 4, 5. All right, so That's all looking very good for this low being in right here. That low is at 111.50. We'll start. This may be wave A. We may see a wave B and eventual wave C. Maybe back into this wave 3-4 zone, somewhere about 1.1223, somewhere in there, for it to end our correction and then start another impulse to the upside. That's what I'm thinking. All right, Great British Pound. Here's the longer term count. Here is the 2008 crash. Looks like an impulsive wave to the downside for wave A. And then we had from the 2009 low, we've had this long choppy sideways move with an A, B, C of B. Looks finished. Now, it's possible we've got a completed impulse to the downside here. It's possible that this is a wave C that's finished. And it would be truncated because it stopped well above the end of wave A. We don't know yet whether or not wave C truncated. There's certainly a possibility, given enough time, we could see a larger 5-wave pattern to the downside to fill out wave C. But for the time being, as we move in here a little closer, there we go. We do have a 5-wave move to the downside complete. 1, 2, and then a 1, 2, 3, 4, 5, 4, and then 5. And now we've started this impulse to the upside, and we'll zoom in on that in this next chart. We've got impulse to the upside for wave 1. Looks like a pullback for wave 2, or what I'm starting to lean towards is that we've got a running flat wave 2 instead, and I've miscounted this wave to the upside, even though it looks a lot like an impulse. Could you carve some kind of double zigzag or something out of that? I suppose you can. Either way, it's an ugly wave B, or it's a wave 1 with a really ugly sub wave 2. However you cut it, something's ugly with this count. So however you want to look at it, label it, whatever the case, we do have this rule of 4 breakout, and it's moving along fairly strongly here. And so I think we should probably just run with it until something breaks. And right now, it's continuing to build higher as expected. Right now, out of this previous low at the end of wave 2, I'm seeing 1, 2, 3, 4, 5, 6. Actually, this is a flat correction, 6. And we've got 7. We might get an 8 and maybe a 9 for wave 3. All right, so we got a wave 1, wave 2, 9 waves up for wave 3, because impulse counts always end on a count of 5 or a count of 9 or a count of 13. So I think this could end on a count of 9, possibly challenging this last swing high up here at 56.98. And then we might get a pullback, possibly building up our right shoulder, as this is the left shoulder. This can be the neckline between these 2 points. This can be, wave 4 could end up being a right shoulder, and then we see a break of the neckline and an impulse to the upside. Now, there's certainly far more bullish counts than this, but this is the one we'll use to work off of at this point in time. Looking at USD JPY. All right, so here's the long-term count. Here's this major bottom that was set all the way back here in 2011. We've had this nice impulsive drive to the upside. But this is right now, though we did have a full count. We didn't get the reversal that was expected. Instead, we built this little triangle here and a thrust up. Now, this triangle thrust does not fit into the rest of this count very well at all. The only way that it could possibly fit in to the rest of the count is if this is actually this 5 up here. The 5 is still yet to be completed, and we've got a sub 1, sub 2, sub 3 working on a sub 4, maybe sub 5. So either because this is a highly manipulated market by the Bank of Japan, and that's just kind of causing what would be the normal ebb and flow of the market to be disrupted. Um, and that's why we've got this funky leg up that really doesn't uh, match well or marriage well with the rest of the count. That could be the cause of it, possibly. All we know is that we got this triangle thrust count, and that gives us a high probability of at least a pullback down to where the thrust started, which is about 118.50. We break 118.50, then there's no way you can count this as a continuing 5-wave move into 5 of 5 of 1. There's got to be some way of counting this. Maybe it's borrowing this wave back here off of this triangle, which I typically don't like to do. Anyway, that would be a strong indication to me that a major top is in, and we are going to start to see a sell-off down into wave 2. Finally. Been waiting on it for a while. All right, so let's move in a little closer here. We do have the triangle. We do have a nice impulse to the upside finished, and we've got a nice reversal impulse to the downside. So everything is there for the start of a significant reversal. We got ABC up for wave 2, and now my expectation is while we're below that wave C, we'll start to see continued selling. If we break above wave C, then it's just going to be an indication to me that we've got a second zigzag in place for wave 2 that may be wanting to fill in some of this manic drop right in here somewhere. So if that was to take place, that's fine. We'll try another short again later at that point in time. All right, so let's go on to the peripheral markets here, starting off with crude. So crude, here's a long-term count. Got a 5-wave move to the downside finished. We've got, we don't quite got a full impulse completed to the upside yet. We got a wave 1, wave 2, flat, running flat, wave 3, wave 4, which is sharp, so that matches nicely with an alternation with wave 2. And now the expectation is for wave 5 of 1 to be fleshed out here in the weeks ahead. If we zoom in on it, here's a wave 3, here's wave 4 sharp. That all looks very good. We've got initial wave 1 up. Here's a double zigzag for wave 2, and then a 1-2. Either a 1-2. I'm starting to favor this being a 1-2, 1-2 count, and we've got a 3 of 3 to be realized to the upside fairly soon. But again, would like to see the price stay above the 20 DMA, at least right around that 59.50 level, which is just below there, just by a few cents. Natural gas. All right, so again, rule of 4 breakout working very nicely. Got an initial impulse up, is finished as expected, and now working on this wave 2 pullback. Now, this is looking impulsive to me, like one single drive to the downside. So this could be wave A, and it may have finished today. So I think early next week we may see a 3-legged pop up into wave B, maybe fill in this manic drop here at around 286 or so. And then once that's done, we may see another 5-wave move to the downside for wave C, maybe filling in this manic drive to the upside just to keep everything nice and organized, nice and tidy, cleaning up its messes, as I like to say. And wave C could also test the 61.8% Fibo there at about 269. That would be just picture perfect end for wave 2, and then we see a nice wave 3 advance to the upside, which should have very little trouble breaking north of say 330 or much higher. So really good potential opportunity here. We just have to wait a few more days. All right, so here's the NASDAQ, and here's my long-term count. Here's the 2000 top. And we got this impulsive drive down into wave A, into 2002, and then we've chopped along here with what looks like a single zigzag to the upside, and then we've got a 3-wave move to the downside down into wave X, And so if we zoom in a little bit closer here, at the end of wave X, you can see that we've got a 1, 2, 3, 4, 5 up for a wave A, or potentially a wave 1 there. We got a sloppy, choppy sideways move here into wave B of 2 that finished. And now we're working out of B or 2. We've got 1, 2, 3, 4, and now this ending diagonal 5 that looks very, very convincing, leaning very heavily upon this long-term supporting trend line on log scale, of all things. So this is looking ripe for a sell-off, I tell you what. But I'd like to see the price stay above this critical resistance right there at 45.40-ish in the meanwhile. And like any, the typical response out of a ending diagonal is an impulsive drive to the downside that comes all the way back to the ending diagonal origination point, in this case 3701. And the move is usually 5 waves, and it's usually faster than the time it took for this move to develop, this ending diagonal to develop to the upside. So it should come fairly quickly. And then once we get down here, we might see another bounce up, because the stock market just refuses to go quietly into the night. It's going to fight and kick and scream to keep itself from being sold down. It's because the market is full of hopium at this point in time, and so you've got lots of people seeing these sell downs, and especially retail buyers, and they're saying, "Oh, look, a dip, we better buy it up." And sure enough, it causes the market to drive all the way back up. But eventually, more than likely, it's just going to end with a lower high and maintain a downtrend that way. So anyway, this is my expectation to unfold here in the months ahead for the NASDAQ 100. So this could be wave C or wave 3. And so we're at a very minimum, I think we'll get at least a 20% pullback, possibly back into this previous wave 3-4 zone at a very minimum. If this is a wave C of a major B, then I guess Armageddon is going to start somewhere in here, and you're going to see the stock market crater into wave C, which could possibly be all the way down here below wave A at 700 some odd points. All right, so yeah, you could get in a short here and short that sucker all the way down here, but by the time it gets here, you may not like the world that you live in. Yeah, because obviously something very traumatic would have to take place in order to cause the market to fall that much, I think. So financial upheaval, mass chaos, dog and cats living together, mass hysteria, that kind of stuff. Let's move on to any diagonal. We've got for the 10-year note, looks finished to the long-term count here. And so the expectation is we finished up wave 2. It's done a good job of backtesting the previous breakdown of the ending diagonal. And now the expectation is to start to see this wave 3 unravel the price to the downside. And if we zoom in closer here, here's that wave 2, and this is just a closer look in. We've got initial wave down for wave 1, and A, B, C finish for wave 2. And we zoom in here closer, looks like wave 1, wave 2, wave 3, wave 4 for sub 1. Sub 2 is finished, which coincidentally, if you, for you folks out there that are interested in fractal movements, check out this fractal move. We have wave 1 down, we've got a wave A, wave B, all right, and then two waves to the upside, and it looks very, very similar. This looks very similar to this development right here, fractally just smaller, as you can see. But if we zoom in here, The market did, it's confusing me a bit here because it does look like we've got a nice impulse down here, wave one, and then it looks like an A with an ABC to B, and then a pop up into wave C. Now this C has come up here a little higher than I would have expected. It came up above wave B here. Is that possible? Certainly. It could be this market wants to fill in this little bit of a gap here before topping out and then dropping again. That's a possibility. The other possibility too, though, on the bullish side, is that we've got a left shoulder here, um, a left neckline, head, right neckline, and we could see a little bit of a drop, a choppy drop down here for a little bit into a right shoulder, and then pop back up again, um, creating an inverse head and shoulders pattern, which is bullish. So that's another thing I'm paying very close attention to. And if that was to take place, then we'd have to back out of our shorts, and it could be this market wants to come up and fill in more of these manic declines to just clean things up a bit. It's hard to say. Um, for now, we'll keep short and pay very close attention to this movement in the days ahead. Okay, so I think that about covers it for the day. Yeah, all right. All right, well, it's been great chatting with y'all, and even though it's been a one-way conversation, I hope you all have a great weekend, and we'll be talking to you later. Adios.